If you spent 20 years of your life doing VC, venture capital, if you have a pool of billions of dollars of capital that you raised from limited partners and they gave you the money and you agreed to a contract that you would invest it in venture capital, and then you're staring at the crypto world, then that might make sense, right? You have a strategic pool of capital and you have a strategic capability to invest in early stage companies. You should. If you just have the idea that you'd like to be a venture capitalist, well, here's the problem, Dan. I have $1 billion of capital, but it's not limited partner capital strategically committed to venture capital. Okay, so I could just buy Bitcoin with it.
Mm-hmm.
Right. So if I were to invest in 10 companies, that's 10 companies out of 100,000 companies. What's the success rate? There's 100,000 companies that might plug into Bitcoin. I would rather just own the Bitcoin instead of expressing a directional exposure or an opinion about which of those companies. I mean, don't you have to analyze all 100,000 companies to know that your 10 are going to be the ones that win? And so my problem with that is I don't want to be in the business of choosing winners and losers in that space, nor do I want to manage the early stage VC process. I would be distracting myself, my management bandwidth. I'd be moving away from running MicroStrategy and managing Bitcoin. I would be running into the VC world, and I'd be diluting my capital, because $1 billion invested in VC is $1 billion not invested in Bitcoin. When I talk to all these Bitcoin companies that they're VC financed, they're like, "Oh, I just raised 100 million." I said, "Well, how much Bitcoin do you have?" They said, "Oh," they look their head down, like, "They won't let me invest in Bitcoin." I'm like, "Well, that's pretty foolish. Why don't you take the 100 million and put 80 million of it into Bitcoin? Because if the business fails, you'll probably still succeed. And if the business succeeds, then you'll still succeed. And on the other hand, if Bitcoin fails, you're not going to succeed no matter what you do, right? There's no point in being the world's best Bitcoin something or other if Bitcoin goes to zero." So the problem, I think, with the VC is you're taking capital that could be invested in Bitcoin, and you're investing it downstream 1, 2, 3, or 4 layers away from Bitcoin, and you're taking all of that execution risk and competitive risk when you could just own the underlying asset.
Let's talk about that a little bit. And then I understand where you're coming from, and that's why we're involved in your stock. But there are going to be a lot of winners too, right? There's a whole discussion or narrative around Ethereum, right? But you're focused on Bitcoin specifically. So we run a portfolio of between 40 and 60 names, and are constantly screening through about 200 different companies that are going to be involved in the blockchain and crypto space. But you're
okay, but you understand,
Bitcoin.
You raised money, and your charter is you're required to take a diversified interest in a market basket of securities, right?
Right.
That's your charter.
That exactly is the mandate.
What if you took all the money invested in one company? Are you allowed to?
I'd be fired.
So you understand, you have to, right?
Absolutely.
Because your investors wanted to buy a diversified portfolio of securities, I assume.
Yes.
Right?
Yes.
You probably can't even buy the underlying. Can you buy corn or oil rights or land or the underlying Bitcoin? No, because you have a charter.
Correct.
Okay, so it's totally legitimate. But you understand, you raised all your capital with a strategy to invest in a diversified portfolio of securities. And maybe you've got a tighter strategy. Maybe your focus is on the crypto world or the whatever world, right? Well, my strategy is to run an enterprise software company that builds the world's best business intelligence software. And my second strategy is to acquire and hold Bitcoin. And that's the first 2 paragraphs, or the first paragraph of my 10K. If you read it and pull it, that's what it says.
Sure.
Well, that's a very clear disclosure. If you're investing in MSTR, then that's what you're expecting to get. My job is not to diversify your portfolio to 100 other securities. My job is not to hedge the risk. In fact, if you had $100 million and you wanted 1% exposure to Bitcoin, you might prefer to own MicroStrategy that says we're going to be 3x leverage Bitcoin than own a Bitcoin ETF, which is 1x leverage Bitcoin. And you certainly don't want to take your 1% and invest it in a company run by Yo-Yo Smith that sometimes buys and sometimes sells Bitcoin and hedges it for you, but doesn't tell you what they're going to do, and they're not predictable. Because if Bitcoin goes to zero, then you're going to lose your 1%. In which case, if you're 20% exposed, you only got 20% of the upside. If you're 1x exposed, you got the full upside. And if you're 3x exposed, you got 3x the upside. So you understand the number one question is, what exposure am I buying? I'd rather own the company that's got the most exposure. And the second is, do I trust them and do I understand their strategy? I don't really want someone that's flaky, that's going to change their strategy and blow with the wind, because it makes it impossible for me as the portfolio manager to construct my portfolio rationally. If you're in the aluminum business, I want you to do aluminum. And if you're going to be in the timber business, I want you to buy timber. And if you're in the Bitcoin business, I want you to buy Bitcoin. And the one thing I don't want to read is, well, the company may or may not buy it, and they may hedge it if they get worried about it, and they, they're not quite sure, right? Because, I mean, if I wanted an uncertain, security or an uncertain outcome, there's a lot of ways to get an uncertain outcome. I want to know what I'm buying. That's why you put it up front. And I think from an investor relations point of view, our job is to have a strategy and execute the strategy with clarity and consistency. And I think from a securities point of view, that's definitely the safest and most responsible way to go about it, right? If you're unpredictable, that creates complications down the road.
I totally agree with what you're saying. And sometimes we're going to go after different types of companies that maybe are conglomerates, but to your point, we know they're conglomerates. In your case, we know exactly what we're getting, and we appreciate that. So we always try and conclude these calls with two wild card questions. Okay. The first question I have is, what is the one thing investors in the blockchain are not paying attention to today, in your judgment?
I think everybody underestimates the success and the value of Bitcoin, and they overestimate everything else. I mean, Bitcoin is 10 years old, successful proof of work system. It's not clear to me, like, you've only got two things in the blockchain that have been deemed as property or commodity, Bitcoin and Ethereum. There's only two. But there's only one of them that has a consistent strategy for the next decade and a consistent path for the last decade, and that's Bitcoin, right? So I think it's pretty important to understand that Bitcoin is pretty much the most predictable thing in the entire blockchain universe. Everything else is uncertain. There's massive technical uncertainty, security uncertainty, legal uncertainty, execution uncertainty. And so I think people overestimate, right, the certainty or the value of everything else. I think they underestimate the value of Bitcoin. People ask me if I'm, are you going to diversify? And my point is, the most diversified strategy you could take is own all the Bitcoin.